Hi traders. I thought I'd put together a new recap for you today because I thought today was a great example of some key trading lessons in terms of how to adapt your targets to the market environment, to the market context, also to understand cases where you might have high risk trading situations and how to manage your risk accordingly in those situations, how to consider your expectancy on those trades so that even if you have a low win percentage potentially on certain aggressive trades, you can still end up with a nice positive expectancy because you're able to manage your risk accordingly, keep your risk low. So we'll go through some of the stuff here and get to that expectancy a little bit as well. So right off the bat here, we did have a pretty nice clearly defined area, but we had definitely been moving up a lot of buying action over previous days. So that's the path of least resistance right now. That's the direction that we wanted to trade in if possible. Right off the bat, I did try to get long and wasn't able to get a fill. And then we got a situation here that made it quite a bit riskier. So it was a one best avoided. We talk a lot in our program about just that early time in the markets and the order flow coming through, coming off the books, and basically the market trying to find direction. We have to be very careful in the first minutes of the market and make sure we're not getting into poor positions. But once we started to hold in here and popped up again, did take a very aggressive long and held this one for 3 points. This is a case here where a lot of traders just kind of have set targets all the time, and there's benefit to that, especially for newer traders. But if you're always setting your targets at, say, a couple points, you're going to run into situations like this where it just doesn't really make sense, because either this trade's going to go a point, point and a half, or it's going to run more than 2 points. And 2 points is probably not going to be the best situation in terms of a target, because it might cause you problems if it comes close and just can't reach, and then you'll miss out on your profit, or you'll miss out on the extra profit. So you have to consider these things in advance. Have a plan. This is a case here. I was looking for the move through, got some good momentum, and then ran up into our first problem area here. Got another long opportunity as well. Was waiting to see the reaction off that area, so entered it a little bit later when things slowed down a bit, and then just took the couple points back up into the problem area again. And then from there, it didn't make sense to get back in. We had pretty clear situation in the market in terms of change in momentum. Didn't make sense to take another trade there. And similarly, the shorts doesn't make sense because we just don't have enough compelling evidence to be going short, especially in a bullish market. So really important when you're trading that you consider the overall context of the market. You don't really get blinded just by staring at the last few bars. That's what happens to a lot of newer traders. So it's vital that your plan for action for trading includes a broad look at the market and that narrow look, and integrating the two together if you want to have the best performance. Now from there, was hoping to get long, didn't get a chance, something very aggressive in there, but wasn't able to get in. And we basically took off to the upside here based on what was a little bit of a rumor, perhaps slightly confirmed, but possibility of getting a deal done for the debt limit. So the price just absolutely shot to the upside here with a load of momentum. Now the trouble with that is that we didn't get a smooth pullback. We were very extended. We started to get this choppy action. Made it a very risky trading situation in here on that pullback, because we also didn't have clearly defined areas where we could expect that order flow to come back into the market. And you need to be able to read that sort of stuff to be able to take safer trades. So this was a very aggressive situation. I did go in, but knowing that I needed to see this thing break the upside right away, and I was looking for a very aggressive target as well of 5 points. And so it's one of those cases that I knew I'm getting into a low percentage situation, but I also know that if I keep my risk very low in that situation, I keep my reward high, even if it is low percentage, the expectancy is very high on that trade. So I don't mind taking those, but that's what makes them advanced. You have to have an understanding of that sort of dynamic in the markets. So this one here didn't work out for me. Just took a very small risk, knowing that just with how extended it was, it could easily pop down into some areas to find order flow, which it did. From there, we started to range a little bit. We did get another chance here for a long. This one I gave a little bit more room to initially because it was a little bit of a safer trade. Looking for, again, the big target because just based on the strength of the move, that's what I wanted to see. I wanted to see that break and that run. Fortunately, didn't get it here, and it didn't seem worth it to me to take the smaller profit. I was definitely holding for the bigger one, so just took the small loss in there, and then finally did get the trade that I wanted. Again, looking for that 5-point target here, but just couldn't get it. Very limited momentum on the break, and not sort of the situation that I was hoping for. Eventually, once we popped down here and we were refusing to make that target, I only missed it by a tick, 2 ticks for the guaranteed fill, but no harm done. Still got the 4 points there once things really slowed down. And because of the slowdown in the move, the false break potential wasn't really worth trying along again, especially after an extended period of consolidation. So that's just another one of those market context, market structure things that if you're a newer trader, it's really important to pay attention to if you want to be successful trading, like basically day trading the markets. If you don't have an understanding of the bigger picture, you will struggle a bit. And then finally, we did have a nice push down here for what was a fairly aggressive short, but based on what I was reading here, it was a short that made sense. Finally tried to take another one that I was not fully convinced on just based on what we were seeing in the market and the limited momentum. Didn't get a fill on that, so I ended up canceling my order. And then finally we started to move up a little bit again, but still very limited momentum in the market right now. So that was all the trades for the day, and ended up being just 4 wins, a couple losses, and 10 points. So it's still a pretty fantastic day, well worth sticking around for, even though I had to stick around through a couple losses to finally get the trade that I wanted, but was worth it. So hopefully you guys did really well, and hopefully you guys can take a few lessons from this as well in terms of, as I was mentioning before, just reading that bigger picture, managing risk, all that. So yeah, hopefully you guys had a great day, and look forward to more recaps in the future. Thanks, guys.